Hey, this is Justin with DayTradeTheMarkets.com on Friday, August 24th, and I wanted to take a look at several markets. I want to look at the E-mini S&P, the Russell, the crude, then the euro, looking even before the regular trading hours open, and just take a look at them from the perspective of looking at the relative aggression bars. Now, our software, and you're familiar with this if you've seen any of the other videos, our software has a lot of evidence that it gives you. It's got real-time support resistance zones, it's got a real-time filter, it's got deceleration signals, but kind of the first building block that we talk about are what we call these relative aggression bars. And just as a quick overview, we have three levels of both positive and negative aggression. And I see that I have the word negative spelled wrong. I apologize about that. I got to fix that. But what that's telling us is which side of the market in real time is showing more aggression, and it's aggression that actually moves the market. And so what I'm going to show in this video, what we like to call our market roadmap, is we like to look at just the level 2 and the level 3 buying and selling aggression bars, as well as what we call our high velocity moves, which are notated by a box. And we like to look, do we have follow through or do we have rejection? So for example, if we're looking at, let's say, a level 3 buying aggression bar, do we have continuation higher or is there rejection, and do we have reversal lower? And that's giving us short term a very good picture of which side of the coin the market's or I should say, which side bulls or bears are in control. Okay. Now, in this example, I'm going to turn off the level 1 buying and selling bars. In real time, when you're trading, I recommend having them on. Especially, they're especially good to kind of help you manage trades and so forth in terms of kind of maximizing profit potential or getting out of trades early. But for this example, what I'm talking about, kind of our first building block, is just, do we get follow through or do we get rejection when we see these bars? And so if we look at some of the markets today and just, like I said, take off everything except for those relative aggression bars, it's a pretty interesting, gives you a pretty interesting idea of what was going on. So here's the ES, or the E-mini S&P, and this, heading into the day, we were expecting some follow through lower. So our bigger picture bias was shifting, at least transitioning down. However, you can see that our first major structure was a level 3 buying bar there. And our expectation when we see that is that the low of that's going to hold. And in fact, we have a trade that we call the level 3 retracement trade, which is exactly that idea, trying to get long at the low of a level 3 bar. And so at this point, there's some conflict. There's the bigger picture bias is at least transitioning down, whereas the short-term kind of right now structure is actually telling us that bulls are in control. And so at least the way that I look at this is I prefer to trade on the side of the bigger picture bias. However, if the short-term structure, and in this case, it's showing us that buyers are in control, and that continues higher as well. If the short-term structure is in opposition to that bigger picture bias, I either want to stay away or I'm going to defer to that short-term bias. Okay, so ideally, again, I'd like to be in line with the bigger picture bias, but I'm certainly going to defer to what's going on right here, right now, and that's what this software and these relative aggression bars do very nicely for you. So, getting back to the ES today, you can see that we had a level 3 buying bar, relatively early in the session, our first major structure with follow through it. So it's telling us bulls are pretty well in control. We break out on the level 3 buying bar as well as this high velocity move box. Again, immediate follow through. And when we have such immediate follow through, we also have a trade that we call our level 3 or high velocity move continuation trade, where we're looking to get long toward the high of those structures. Again, if there's immediate follow through, you can see the difference here. We tested the low first. When the low doesn't even get tested and we just have immediate follow through, then we like to look for this trade that we call the level 3 or high velocity move continuation trade. But I'm getting a little ahead of myself here. I just want to kind of look at the structure or the map, short-term most likely direction, I should say, based on is there follow through or is there rejection. So you can see the first time the sellers try to make a move is right in there with those level 2 selling bars. But you can see we had immediate rejection. We had one tick below the low of that bar, then it rejected and tested the high, and then we had full bars above. So again, that's telling us it's kind of the bears giving up the ghost there, and the bulls are in control. And you can see shortly later we had a pretty steep breakout. You can see that every time the sellers tried to make a move, at least toward the end of the day, it was rejected, and every time there was buying structure, there was some follow through. Now that kind of ended in here, and then it got a little wild. It's options expiration day. It's a Friday. It's late on a Friday, so that's not to be that's not too surprising. It gets a little bit volatile, but hopefully you're able to see what I'm talking about, in that the short-term structure is giving us clues as to who is clearly in control. Obviously, that's information that can help you when you're trading. So let's next look at the Russell. And obviously the Russell's relatively well correlated with the E-mini S&P, so it's not surprising, but you can see that when we were making new lows, level 3 buying aggression. It's telling us when we had some follow through, certainly when that low held, buyers are pretty well in control. Same thing, level 2, high velocity move. It's all follow through. Bulls are firmly in control at this point. Level 2, wave of level 3 plus a high velocity move. This low gets tested, but I don't even know if we had a full bar below there. So, it's telling us that the bulls are very much in control until this is our first sign that bears are stepping in, and we did have some follow through. And you can see the short-term direction was down. Then we had some chop here, again, toward the end of the day on a Friday, so that's not too surprising. It gets pretty volatile. So that's the Russell. Hopefully, again, you're seeing what I'm talking about with this roadmap idea. Just using, and again, there's a lot of other evidence that you want to use, our bigger picture bias, the real-time support resistance zones, the filter, decelerations, and so forth. But this is kind of the first building block, and that's why I harp on it quite a bit. So next, let's have a look at the crude oil. Actually, you can see this is from yesterday. Same thing toward the end of yesterday. You can see the follow through on this extreme selling until down here at the lows when we had a little bit of a retracement. That's a heck of a move in oil. And then we opened in here, and our first major structure was this buying bar, high velocity move, level 3 bar, high velocity move, level 3 bar. You can see buyers are in control at that point. Wasn't until this structure, high velocity move made by sellers, that had follow through, that it's our first sign that buyers are no longer firmly in control. We get a little bit of a confirmation here, and you can see sellers basically took over at that point. So, and you can see we had a move by a buyer's right there with a level 2 buying bar, immediate rejection. Hopefully, you're seeing what I'm talking about there. Okay, next let's have a look at. Let's look at the euro. And what I've done with the euro is I actually set up a session that started at 6 a.m. Eastern for, just as an example of how you might use this if you want to trade prior to the regular trading hours in the U.S. Same thing here. The first structure we see there is a high velocity move made by sellers, follow through. Directionality is expected to be down. This is a little bit different though. We had a level 3 selling bar. Looks like we're having follow through. It did get rejected in here. So we had a move higher. Then we had this level 3, this high velocity move that was rejected immediately, move lower. This level 3 selling bar basically got rejected, expected to move higher, and you can see we have some high velocity moves with follow through. So this wasn't as picture perfect, but it's still showing us pretty clearly which side's in control. And you can see that heading into later in the day, we stay within that. Within that box, basically, from this big move, and that's not unexpected when you see a pretty major level 3 bar like that. That's relatively expected. So hopefully that makes sense. I know I went through quite a few markets, and we can look at others, but I want to try to keep this a little bit short. Just wanted to kind of again show that roadmap idea using these level 2 and level 3 buying and selling aggression bars, as well as the high velocity moves, and the idea of is there follow through or is there rejection, and that clue giving us a pretty high probability idea of the short-term direction of the market. So hopefully that makes sense. Hope you have a great weekend, and if you have any questions about this, let us know, and we'll be happy to answer. Okay, have a great weekend. Talk to you soon.